We are going to go ahead and get started. So, as stated last night, Asia session did run higher, which was unexpected because we already had a weekly cycle cracking correlation on top of everything else that we had. But the market ran up higher once more, and all this has done is just given me another reason to be bearish because we've just solidified another monthly cycle bearish sequential SMT, and on top of that, we have a 4 hour, even though it's not too crazy in sync with premium and discount, still is a cracking correlation. A 4 hour precision candle on the S&P and the Nasdaq. The same thing with the Dow. All of these are precision candles, but there is an important cracking correlation that we are about to look at on the lower time frame. So, in terms of CPI delivery, still bearish. If it delivers bullish through everything that we have, I will be genuinely very surprised. But the maximum daily range for where, well, I'll say the maximum range for where CPI can deliver is potentially this low right here. Upon that release, we'll see where that takes us. This range from this low to this high and the high we're at is only 40 handles. Typically CPI will deliver around that same area. So we'll see if CPI can deliver down to this low. Same thing for the Nasdaq to this low. And the Dow for this low right here. Now in terms of daily range, again, from this low and further, still would like to see all of these lows in due time get delivered. Might not be there today, but if CPI delivers lower, good chance we'll see this be the high of the week. So on top of the monthly cycle cracking correlation that we have, I don't know why my internet is being so slow. Oh, there we go. I swear around these news event times, TradingView just goes super slow. Anyways. On top of the monthly cycle cracking correlation, we also have a daily cycle. So that just solidifies it even more. And forgot to mention, but the invalidation level for the session is going to be Thursday's high. If price delivers all the way to Thursday's high, that pretty much is going to invalidate everything that we have in terms of bearish, and we'll just have to sit back and wait and see what the market offers. ETH to 800, not anymore. Why not anymore? Not at this time. Alright, so 1 minute until everything gets fun. How many candles or points does CPI offer during or for the S&P and the Nasdaq? On the S&P, it's on a Tuesday. It'll generally be 25 to 35, sometimes a little bit more. So I have it trading higher right now, but that doesn't really concern me upon the initial release because this could just be a wick. Yes, everything that needs to be uploaded after we get done with this is going to be uploaded. If I shorted, was a loss inevitable? If you have your stop close to where that CPI release is, then yeah. But like I said, I don't recommend trying to trade right before CPI. Price was unexpected to take out the monthly cycle and weekly cycle sequential SMTs. Well, it hasn't taken it out entirely yet. This could just be, like I said, a wick. Yeah, this is a relatively slow delivery. How can we confirm that it will be a wick? So let's say there's 12 minutes left on this 15-minute candle. If this candle closes like down here, then this entirety, the rest of the candle will just be a wick. And if it does that, then chances are this was just manipulation. Running out the highs one more time before dropping. How can we frame an entry on CPI day after? So CPI has a couple of characteristics. Usually CPI expands or continues expanding in the direction that it releases in upon that candle closure. So if this candle closes bullish, right, and we close all the way up here, chances are we're not going to come back and clear out these lows. Very rarely does CPI reverse from the initial release. More times than not, it's going to be either a continuation or the news releases and then it's just consolidation. Validation for this would be the Dow's high. Yeah. But we have our validation all the way up here. Do you expect CPI's high to be taken? It's all going to be dependent on how this candle closes. Yeah, and the Dow is printing both a bullish and a bearish daily cycle at the same time. Well, after the 15-minute candle, not the 5-minute. 15 minutes going to hold a lot more substance. What if we traded a little higher today and tomorrow we sold off? I've noticed through backtesting PPI racking off CPI data can be high probability for reversal. That's potential. But right now we're not trying to play 7 steps ahead. We have Kraken correlation, and that's pretty much what we're stemming everything off of. Just this monthly cycle in tune with the current daily cycle that we have. Just listening to what the system says. But now it's our favorite time. I know somebody's going to guess it. What time it is. It's time for musical chairs. Time to lose audio. So you're waiting for this candle close to print? Yeah, waiting for the close. CPI under-delivered so far. CPI can enter the day before. Do you mean before 10 a.m. on the day before CPI? If it's prompted, yeah. Which in this example, it would not be prompted because price just kept driving higher and higher and higher and higher and higher. I had a question regarding weighted probabilities in this example this morning. Would the bearish monthly and weekly cycle S&P last week still hold value just because the Dow has not breached those highs? Yes. It would, yeah. But sometimes price does exactly what you saw right here, where a new quarter will open up and then it'll refer back to that previous quarter and ignore what happened in the past. But all that does, until the Dow, completely invalidates everything, it'll just add weight. Have you taken the universal model yesterday, or because it was against the narrative, I did not take? No, I did not take. You guys know this, I don't trade against my bias. What I tell you guys is the same exact things that I look for. And they stop my music. They're trying to stop me. There we go. In my backtesting, I found that the most volatile CPI is usually driven by weekly cycle SMTs. Felt a bit off this week, yeah. To the downside, NASDAQ weakest, S&P in the middle, Dow strongest. Yes. Do you have any hints from the Forex trade? Yeah, we do. Even if we just take a look at the dollar, right? Dollar showing higher. Pound has been showing weaker. Like, especially if we look at the pound. Right, look at this market. This literally looks like if this line weren't here, and if we just took this chart and then applied it to this chart, this would look like So yeah, pound is delivering lower, euro is delivering lower, and the dollar is delivering higher, which follows in tune with what we want to see, which is good. It's just a little bit delayed, which is fine. How do you feel about this if we hold this 90-minute cycle sequential SMT? So if you're talking about this one right here, this would be a daily cycle. If we hold this 90-minute cycle at the high end of the range that I believe we've just formed, that would be pretty good. So like I was saying about the wick, if the S&P closes around like down here or anywhere, same thing with the NASDAQ, then this was just manipulation. Could you speak on the 15-minute TPD before CPI? Yeah. So all this was just typical. Sometimes before a news event, you'll see a 15-minute time frame TPD come about. That will kind of tip its hand and show you what news will do. Which in certain scenarios like CPI, FOMC, non-farm payroll, it's difficult to see because once you get to that 45-second mark on the 15-minute candle, like once there's 45 seconds left within that 8:15 candle, volatility tends to get skewed, and it's really hard to predict the close of this candle right here. And it's really hard to predict the open of the following candle, so trying to kind of gauge that is going to be really difficult. Yeah, I'm talking. Music keeps cutting out. I don't know why. If we see a 90-minute bearish sequential SMT, can we look to frame a sell? Yeah. I'm just more interested on how this 15-minute candle is going to close. Yeah, we could use, in the future, if we break lower, then we could use this as a breaker. Right here. Would you trade the same day after CPI? Yeah. Generally, the day after CPI is really good. Does the unsymmetrical nature of 15-minute and 4-hour sequential SMTs matter, or why not? So using previous, it comes into account whenever you're looking at draw and liquidity. Framing old daily cycle SMTs as a draw on liquidity, or just old unsymmetrical price action as a draw on liquidity, is going to serve you a lot better compared to just standard highs and lows. If a triad forms a bearish and bullish sequential SMT, then do we wait for it to cancel out on one of the sides? You could do that, or you could do what I'm trying to do right now, which is a lot more difficult, and try to predict which side is going to hold and which side isn't. Alright, so we got the 15-minute candle close. It did close as a wick. So see that long wick right there. So I wouldn't want to see price trade all the way back to this high right here. Would not want to see that. If anything, I just want to see continuation. Lower. Which now we have another cracking correlation. And we'll check on the dollar. Dollar formed a huge wick, being a precision swing point. So that's what I like to see. So if anything, that adds confidence to what we already have. What are your thoughts on the 15-minute candle closure? Like I said, due to the fact that it created a wick like this, I wouldn't want to see price trade all the way back to this high again. Entered a semi-swing trade last night during Asia around 9:25 after we formed another bearish weekly cycle between Friday and Monday, confirmed by 4-hour TPD on our reversion level on top of the monthly cycle. Top of the bearish monthly cycle that formed last week. After 5 minutes, I got smoked by a fat-ass candle. Thoughts on entering during Asia? You can. Things like that are just... Certain things like that are why I usually say wait for the... If you're going to enter a swing, wait for the London or the New York session. But if you have everything in confluence and you have all the cracks and correlations at play and the day has closed showing you it's respecting it, you can enter in Asia and then have your stop the previous day is high or the previous day is low. And certain situations like that where we'll just volatility will surge in Asia, that is something that is pretty uncommon. Doesn't happen a lot. So it's just unfortunate that the time you did enter that did happen. We confirm entries in the 1 minute time frame after 9:30 on CPI day. Whenever it comes to CPI day, generally stick on the 5 minute or higher. The Federal Reserve is talking on YouTube. Somebody tell them to say something bad so the market can don't. Done for the day, just observing now as I have been too tempted by patterns before CPI. My patience is really being forged at the moment, yeah. And times like this is what's going to forge your patience. Just, we have all the cracks and correlations at play, but price is just grinding higher and higher and higher. And until we get something of substance to tell us, okay, now is the time to strike, it's just a matter of waiting. I know you don't like going on psychology tangents, but I had a revelation this morning when I realized that even if CPI were bullish against what you forecasted, it would not matter because you're allowing yourself to be wrong and allows your edge to play out. Because more times than not, the market structure will point towards a bearish CPI, so no need to change anything. If you were wrong once, Tana last night, click for me. Exactly. If you look at it over the course of X amount of times, that's all that matters. Was there an economical reason for the push? I believe it was something to do with NVIDIA. That's what I heard. Kramer said bye. If that's actually what caused the market to do what it did last night, that's pretty funny. And in certain situations, this is why it's important that we wait. Because although I said wouldn't expect price to go back to this high, does that mean enter right now? No. What do we want to wait for? Continuation to use what? This as what? A breaker. Day posted a story with 2026 lab on it. Just want him to come back 2025. Misses teachings as much as I'm grateful for the effort you are putting in as well. It is what it is. Even in times where, for some reason, price just does not want to respect what we've been using the entire year. This is like the first time that you guys have seen me get it wrong more than 2 times in a row out of 7 months. So if you're finding this market difficult, that is fine. That's normal. Summer months are generally the hardest. I've talked about this in the past, but yeah, just 20 Q3, yeah. I feel bad for you Q3 guys because now it looks like everything that I put out was bullshit. Promise you, it wasn't. The accuracy was real. But markets tend to move in seasonalities of high probability and low probability. That January to February is pretty low probability, and then the spring rolls around from March, April, May, that's relatively good. And then June, July, August, again, back to low probability. September is iffy. October, beautiful month. Amazing. And then November, pretty good as well. And then December usually closes things out. Not too crazy. They changed the algo. We're all gonna stay broke. Nah. Times like this are abnormal. Could potentially be creating a micro SMT. Potentially, but if anything, it'll probably linger around here. Wait for this next 5-minute candle to close and then form another 90-minute cycle. When you usually wrap up your trading for the year, second week of December, yeah, around there. The music keeps on going in and out for some reason. Quick question, how do you get the ticker symbol at the top right corner? Tried so many options yesterday but couldn't find out how to move it. So it's actually an indicator. It is this indicator right here. It's like they call the 2 degrees like watermark or something like that. It does look as though somebody was saying we're going to get another precision swing point. Let's see where this closes. And again, music cutting out. No idea why it's doing this. There we go. If a 90-minute hidden SMT stays intact and we flip the fair value gap, would you say we're bearish from there, or would you wait for the breaker to form? Since we've ran higher once more, we're going to wait for the next 30 seconds, see how this closes, and then we'll drop down again to the 5-minute time frame. But yes, if what I'm picturing in my head is what you're talking about, then likely, yeah. So if we're talking about this gap, then yes. If we come all the way back down here, chances are S&P is going to be trading around here. which gap would it be for the universal model, the one we already have with the breaker, or the new one forming now? It'd be a new one. Right now, it's just literally a matter of patience. And seeing if the market actually does what we want it to do. Is the 840 candle a new breaker, or only the range from 755 to 820? 840 candle, no, I wouldn't consider this. If we look potentially, not even that. No, for high probability it'd be down here. 930 must bang. Exactly, we got to see 930 bang. Holy gap on the Dow. It's not every day you see that. Alright, guys, you know what time it is. I have a good feeling about today. Alright, I know it's going away from the magnet. I know it's going away. Listen, gotta give it some time. Any chance we could just trade in that range for the rest of the day? Yeah, there's the possibility of it. Like I said, CPI usually does one of two things: either continues the expansion in the direction, or it consolidates. So that is a possibility. And hopefully my Wi-Fi is still here, because I have a nice little thing right here. And now the candlesticks are not moving. Oh, there we go. Are we back? Think it's time to retire the magnet. You guys are hating right now. But watch. Pawn market open. Did you say maybe another 90-minute? Exactly. See, I'm in secret using the magnet to push price higher to form that another Kraken correlation that will then give us the draw. I'm playing 3D chess over here. I do still want the weekly for value gap as overall draw and liquidity. Yeah, that's still in the crosshairs. Want to run a fade and clash while we wait. No. If we have two consecutive sequential SMTs of the same direction and cycle like we're at now, is it low probability? Yes, it is. But we only have one Kraken correlation at the low end of the range, and we have several dozen at the high end of the range. So once time gets aligned, once we start that move, see, the thing is, what we have now is we're still technically not wrong, in the sense price action still has a very good reason to continue heading lower. and go towards our targets. It's just there's been a lot of distortion in the middle, which is an unusual amount of distortion. We'll see. Still have 46 minutes. A lot can happen in the next 46 minutes. No entry model being printed. Really thought daily cycle sequential SMT before CPI was the way to go. With a safe stop loss for the universal model. So let's say in a perfect world, right, upon the open, we see the S&P drop and then trade underneath this low right here, making this a breaker with like a gap. A safe stop loss would be if you were to short, depending on that gap, like around here. Anywhere around here. And like what was said just a second ago, no entry model being printed. Just because you see a signature in price telling you, okay, it might be go time, that doesn't mean click the button immediately. You have signature in price, that's step number one, and then you have entry criteria, which everybody's entry criteria is going to be a little bit different. For me personally, all I need is a gap. As soon as I get a gap that's on side with what I want to see, boom, that's that. And that's what you see me demonstrate pretty much every time we've tapered, or whenever we drop down to those 1 minute charts, and once we get that surge of volatility in and price is expanding, all we need is a gap. And then boom, we're on side. But has there been any single gap here that's bearish? No. It's an 840 breaker now because NASDAQ printed a higher high? No, due to the fact that it didn't make a lower low. The breaker would be the last two bearish candles. I think it should be 755 swing candle. Yep. These candles right here. because it didn't close above and it just swept. For if we're talking about this, no. For the high end of the range, yeah. The reason why we choose this is because we have lower low right here, higher high, low, higher high. So we have yet to form a lower low. Is a 4-hour TPD at 2 a.m. of any substance? Yes, due to the fact we still have this daily cycle. Which, at this point now, it's just waiting for the market to show willingness to try to trade lower. That's it. The 4-hour TPD now. Wouldn't want to see this be framed bullish due to the fact there's no gap there. But I do see what you're talking about with the daily cycle, which if we're wrong, then yes, this will hold. Should we ignore the Dow since on the daily cycle it's not in sync with the S&P and the Nasdaq? Regards to premium discount, in a sense, yes, you would be correct, and that's why we're waiting for the S&P and the Nasdaq to do its thing. What range are you gauging in general for premium discount to CD coupling? Or is it whatever range is logical, or do you look to measure a previous quarter? You can combine the previous quarter with the current price action. That's what I do. Alright, so boom. Nasdaq running above the high one more time. So from here, which I deleted the magnet already, but my reverse psychology worked. So now we'll see if we can finally get the get something of substance to form. The open, equities open. No, we can use. So on a lower time frame basis, if we were to trade lower upon the open, 8:30, this is likely to be used as a breaker on a lower time frame basis, because we have what? Lower low, higher high. If we break below this low, lower low once again. Would this newfound 90-minute sequential SMT be low probability, as it is not off of symmetrical quarter highs. No. The only time that becomes low probability is, let's say we have the NASDAQ taking out at this time, and then we have the S&P taking out at a later time, and then we have the Dow trading also close to this high. That would be low probability. But if the S&P and the NASDAQ stay respective to this high right here, then it's still in motion. Still good. But until we get a signature proving that this is in play, meaning we get that break lower, then what do? Nothing. Because so far, throughout this entire stream, we've had Kraken correlations telling us, logically, it should move here. But have we gotten the market to actually show us that it does want to do what we want to see it do? No. Which some days are going to be like this. But this is how you prevent unnecessary losses. And when I'm wrong, the signatures are still there. I just choose the wrong direction. Exactly. Because this is inherently discretional. Because there's some other parallel universe out there where I said, okay, I want to see this daily cycle SMT at the bottom of the range hold. And it's holding. So the signatures form on both sides. And every retracement and reversal, they'll have the signatures there. The only difficult part is deciphering whether or not which side should hold. That's it. Could you go over the daily cycle of sequential SMT, 1 hour TPD, 15-minute TPD before CPI? What would have prevented you from entering, trying to learn from this? Prevented me from entering in the fact that everything was, quote unquote, everything was there, but no entry down here. Is that what you're talking about? So, the only time I say to trade CPI is if you're able to get in the day before. If you saw this Kraken correlation that formed the day before, and you entered, and you had a stop that allocated for it, you would have gotten stopped out. Never do I say, what do I say about entering right before that CPI release? What do I say about it? Never. Don't do it. Why? Because of things like this. Even though it all seems aligned, sometimes you're going to have that initial release pose as manipulation. Have we collected enough points to go against the true reversal yet? In my opinion, no. Until the Dow, like I said, until the Dow trades above this high right here, which it could be today. Like I said, could be today, or it could be tomorrow. Until the Dow trades above this high, everything I have I'm sticking to. Something you don't want to do is you don't want to flip too many times. And I've already gone over this before, but you want to really be proven wrong. Once you have a direction, you pick it, you want to be proven wrong. Because it's better to stay on one side and be proven wrong while doing nothing than flipping direction every 5 seconds doing something and then getting proven wrong the hard way by losing. And when not to trust the Dow? Certain circumstances. Being premium and discount, which this monthly cycle is a lot. That's why we're using it. But let's say the monthly cycle formed all the way down here. Like let's say the Dow was trading down here whenever this monthly cycle formed in Asia. If the Dow were trading down here, then I wouldn't really consider it. And I would look at that as asset synchronization, meaning we'd look for higher prices on the Dow, leading to higher prices on the S&P and the Nasdaq. But due to the fact that it formed in retrospect to premium and discount, I deem it viable. Which we will see. There we go. So like I said about this with the breaker, we'll see if we can get a breaker here. There's a chance that this candle could pop into this gap and potentially tag here and then see the drop. Alright, Nasdaq making new highs. Not what we really want to see. So now we're going to monitor the Dow and the S&P are going to stay respective. With what you said about really needing to be proven wrong and not flipping you wrong by losses, how do you gauge the right validation levels that allow that to play out? Because even if the Dow took Thursday's high in this example, the monthly cycle is still in play, or do you just gauge based on the market experience and intuition? It's going to be a little bit combination of both. But remember what I say, right? What comes first? Signature and price. What comes second? Entry technique, or how you're actually going to enter. So if the signature and price comes first, okay, you can have the signature and price. That's cool. If that signature and price is still there and still could be viable, you just need to let time do its thing. If you haven't taken any trades because your entry model hasn't formed, let's take, today for example, right? We have all the cracks and correlations at the high end of the range that formed. Has the market dropped lower? Not until just right now. Have we done anything? No. Are we likely to do something now that the market's finally showing us what we want to see? Yes. Although the market hasn't shown us an entry technique, we're still being proven, okay, market likely isn't going to do what we wanted to see it do right now. So there's a difference between, because all losses are going to come from is if you're right about where the trade direction is and you still get stopped out, the only thing that was wrong about that was timing. But if a trade, let's say you enter your stop and then you get stopped out, but at the same time, it invalidates the idea completely, then you were framing the trade off of the signature itself instead of waiting for an entry technique. The only time that will happen is if they follow in tune with each other. So you want to enter when the entry model tells you to, not the signal exactly. The signature and price is just informing you, hey, the market's likely to go this way. Okay, I'm likely to know the market is going to go this way. Now I just got to figure out to get onside. Boom. That's it. Which this is why I don't like trading a 1 minute chart on CPI day. Because what did we want to see? We want to see retracement into here, but what happened? We ran the high simultaneously. Which, if you allocated a stop for this and you had your stop loss above this high, or a little bit above this high, then you were good. But chances are, if you took this, your stop was right here. And then you just got wicked out, and now price is moving in your direction. This last run did the S&P create a breaker. You could consider this right here the breaker, but this is going to be the real one. This is like a mini breaker within inside of the run. If price creates a gap right here, but this is going to be, if we form a gap in tune with this, that's where the real meat is going to come from on the S&P and as well as the Nasdaq. So considering this entered at that 1 hour TVD, there was not a clear reversion level, which I would have wanted to see. Is that the missing confluence right there in such cases, or how would you have proceeded? For example, after the daily cycle sequential S&T, there was a 15-minute change in the safe delivery and clear 5-minute gaps not working due to CPI, or am I messing things up? So within that, if you don't see your reversion level inside of a TPD, chances are it's not high probability. On top of that, with what you're talking about here, like I said, before that CPI release, this is why I say not to trade CPI, because there's the chance that it does exactly what it did today. Because we still have a lot of time left in the day for it to trade lower, which is what we expected. There's still a lot of time for that. And we have the Dow trading above this high again upon the open. But, lost where I was at. What was I going to say? Yeah. So that's the reason why I say don't trade before CPI, is because we can see something like this right here. The market is still showing a willingness to want to try to get lower, which we'll have to see how this 5-minute candle closes. But that's why I say don't trade before CPI, which I've said that little phrase, don't trade before CPI, a little bit too many times today. But hopefully you get the idea now. Because it can do this, exactly with what you saw. Boom, run it out one more time, and then create the real move. Say price gives us a 15-minute CPD that forms on the 845 candle instead of Q4 in the microcycle. Instead of looking at SMT between Q4 and Q1, will I look for SMT between Q1 and Q2 to deliver the sequential SMT? Yes. But you don't need to focus. The only microcycle you need to focus on is going to be the one that is between 9 o'clock to 10:30. It's going to be the only microcycle you want to focus on. Look at the cheeky Dow. There we go. So notice how we have the delivery running for us now. So now price is proving that we're correct. This is what I'm talking about. Price proving that you actually want to be correct. So what are we waiting for now? Form of retracement to get alongside the run. Cannot believe that over the past 2 months I've had so many unbelievable trades which got stopped out by 1 or 2 handles right before the move. Listen, before I really got to know what I was doing, you're not going to believe it, but before I got to a point where I really knew what I was doing, what you've experienced right there, where it gets you by 1 or 2 handles, imagine that by 2 ticks. Not even a handle, not even a full handle, but a tick. I had like a 7 or 8 string loss where I was correct about where price wanted to go. I would enter, it would stop me out by the tick. Literally by the tick, or go over like a 2 ticks, 3 ticks, go hit my stop, and then roll clean in my direction. So what you're experiencing is normal. What you're going to get from that is experience. And you're going to learn, it's going to help you where to navigate your stop and how to properly manage it. And for those who are saying which gap, I wouldn't want to see price retrace back into this one. This one and this one. Remember the breaker. We'll see if we get the retracement with the strength. We might not, but we'll see. And look, the Dow delivering. Boom. Good. What do you take from that scenario? What should I do? this is what you do. You review, you look back, okay, what lows, what highs were being taken. And then in the future, where you think that stop loss should be, give a little bit more room. This is why I say, if you take this, allocate a little bit of room. Even though don't put it directly at the high, put it a little bit above, or a little bit below, a little bit below. So I like having these gaps right here in tune with the breaker. Whenever you have a lower time frame gap like this in tune with the higher time frame breaker, that is voila. Which we'll see if we can get the 5-minute gap here. But this gap, if you want to just enter on this gap and then have your stop relatively respectable, being around like here, around here, that's fine as well. Because remember, we still have all the way down here to target. So having a wider stop, that's okay. It's fine. Because I'm not expecting price to return back up to this high. Because this high is in tune with... This high is in tune with this gap right here, and I'm expecting this gap to remain unfilled. Which, this is not a signal service, like I said. If you guys follow what I say, it should be by means of a demo account. Wink, wink. Alright, so we'll see if we get the retracement inside of this gap, or if price is just going to run. So does the 1 hour gap hold no significance right now? If we're talking about this one, no. I don't want to see it hold. Alright, so we have the retracement inside of this gap, 5-minute gap. So do you always put your stop loss a little bit above or below old highs and lows because of those times? Yeah. How far? Let's take the NASDAQ, for example. It did retrace a little deep, or I'm not going to say retrace, but it did go a little bit further above the high than I would have liked to see. But in any case, it more so would have been around like here. So even if I would have taken this, I would have gotten hit. But in an example like this, I would keep it right here and feel safe, due to the fact I'm not expecting this gap to be filled. Now, if it's an extreme high or an extreme low, as this example right here, a good amount of room, but not not anything like crazy, like all the way above here. So as a means for a partial, if you did take this right here, This would be a good area. This would be minor sell side liquidity. Final target for the day. Right here. Do you still recommend avoiding trading CPI day? No. If it's after the release, you're good. Like with what we're looking at now. Just not on a 1 minute chart. What is the average handle slash ticks that the S&P moves? The S&P, whenever there's sufficient volatility in the market, usually moves about 50 handles a day. If there's no like crazy news, like a bomb just dropped somewhere, usually it's about 50 handles within a day. Are you anticipating a 2-3 split this week? Yeah, I'd like to see this be the high of the week. Though I lost today, I had no problem with holding my bias due to relying on my data collection for CPI. What else would you recommend collecting data on? Well, if you felt confident, you felt comfortable, then they're good. It just didn't work out in your favor this time. Other concepts, to get the routine better. It's going to be individualized for what you expect within a day. Was short too early, got stopped, and remained bearish instead of freaking out, yeah. And here's the second opportunity, which is the main opportunity that we've been wanting to see. Okay, we gotta put the magnet back on. But if we put the magnet back on and it goes back higher, we know who to blame. Is Nasdaq going to fill the gap? Potentially, I'd like to see. My focus right now is the S&P. Nasdaq is the weakest for downside. Main focus is the S&P. There's a 90-minute bullish daily cycle with 5-minute TPD and new day opening gap. Do you adjust your stop or so in case that is going to hold? There's no reason to. Price hasn't moved far enough away from the entry yet. If that stops it in its tracks, so be it. It is what it is. But if you've taken a trade and price hasn't really moved a whole lot, and then you come up with a whole another scenario on why price should turn, just let probabilities play out. Just like I said earlier with flipping biases, it's better just to hold and remain on one side and let the market do its thing instead of trying to, flip everything around and then just cause yourself even more harm. Because if you roll your stop too early, then you roll the risk of, okay, what if it comes back and hits me out at right here, and then it rolls back in my favor, and then I'll be dealing with this, and then what if it does this, and what if it does that, and what if, you don't need to deal with that. What would be a good way to prevent entering early? Be to wait for a true open before validating sequential SMT or changing the state of delivery. That's one way. So the CPI is on a Tuesday. Usually the split is 2-3 under certain criteria. The criteria this time being we have drawn liquidity lower. We already have a Kraken correlation. So if everything plays out, we shouldn't return higher. So breaker in a time frame, then a gap on one lower time frame, and boom. Yeah, that just adds probability to it. Whenever you see a lower time frame gap, for example, the blue shaded box that I have outlined, whenever you see that, that's in tune with a higher time frame breaker. That is gold. Are you in? Yes, on my perfectly good demo account, because I legally cannot trade a live account if I'm telling you the trades that I'm getting into if I'm not a financial advisor. So yes, on my demo account. Wink, wink. Because legally, I'm not here to help you make money. I'm here to help you read price. Two completely different things. Fine line, guys. Fine line. reading price like never before. Is it okay to use the True Week Open as a target? Or better to keep 6315? Like, would the True Week Open act as a magnet? Let's see, where is the True Week Open? If it's right here, just might as well run it to the lows. I mean, if you wanted to be safe and take it out here just in case, because there are going to be times in the future where you take a trade and it gets right to your target and then it rolls back against you. So if you wanted to be cautious, then yeah, you could use that. When would you move your stop? You can move it now. If you entered within here, I'd say it's pretty safe to go ahead and move it. Roll this break even. So you never flip bias until price gets to either draw on liquidity or invalidation level. Until then, you only trade in line with the draw on liquidity. Exactly. Do you ever have trades that you just let run to full TP? Like a full week expansion, never touch it? Sometimes. If it's like a really clean, smooth week, then yeah. Like if it's just really running. Or if there's no areas where it seems illogical to take a partial. Like no areas in between that I think, okay, it might reverse here. No. Target is 6,300. I have my sell order set at 6,305. Can't tell you how many times I almost hit TP and it reverses or consolidates for an hour before hitting TP, so I just lower my expectations and fulfill the trade quicker. Yeah, exactly. Won't you hold this until Monday, little the week gets taken? On my demo account, potentially. Remember, guys, we're all doing this on a demo account. Everybody here trades demo accounts, okay? Right, guys? Price always wants to play games at the TP. I believe Tom Hogard said this. But be optimistic whenever trade or trades are running in your direction. Be pessimistic whenever they are showing you they are not running in your direction. Would you look to expect a retrace to this 15-minute gap? This one, no, I wouldn't want to see that. I would want to see this remain unfilled. We already have enough at the high end of the range. There's no need to retrace. The retracement we got was on this 15-minute candle wick right here. Same school of thought. Add to winners, cut losses quick. I'll do you one better. See, guys, the name of the game is really simple. All you have to do, all right, get this. It's crazy. This is the golden secret right here. Okay, so don't tell anybody. This is just exactly. Somebody already knows. All you have to do is buy low and sell high. That's it. It's easy. It works every time. Somebody else said this. I think it was Trev. It works every time. Only 60% of the time. And there we go. There's the partial. Boom. Take a partial. We'll stop to break even. Alright, so who took this on their demo account? Show the screenshots. I love seeing it. Boom. There we go. Took it on NASDAQ. Oh man. Bless it. So from here on out, if you took this trade, if your stop is now break even, you took a partial, boom, you're good. At this point in time, it doesn't matter what happens. The stress is gone. And we'll take this as a good study of notice at the beginning of the live stream, right? We'll take from the time it started to deliver the way we wanted to see to where we are now. But if we look, we can see, were there any clear, this is what I mean by price showing you as a willingness to do what you want it to do. So we were bearish here. I was saying, hey, lower prices, we want to see lower prices, we want to see lower prices, right? But was there any willingness from from this candle, looking to the left, did price show any willingness? Before, if we take from the release of CPI, right here, to where the delivery began, was there any willingness? No. So what do we do? What did we do during this time? Wait. Stalking. Hunting. Okay, 9:30 releases. Boom. That's good. We want to see that. What do we say about these specific candles right here? What do we say? Universal model. What do we want to see follow in tune with these two candles? A gap. Okay, price breaks lower, price breaks lower. Oh shit, what do we have? What's this? Yes, this will be a gap. Okay, boom, we got a gap. We got the breaker. What does price do? Retrace into the gap, going to where? This low. What is this low? External range liquidity. Internal to external? Yes. Boom. Framework for today. And now we have the NASDAQ kind of doing its own thing. That's fine. We took a partial. We're good. No need to stress about anything. Price can do whatever it wants to do. That's fine. So you can enter off the retrace into the gap. You don't need to wait for the close. So usually when you have everything, you need to just wait for a retrace into a gap. You don't need to wait for a closure outside the gap. Nope. Why do you choose that specific low as an external range? This is the, so we look higher high, lower low, higher high. So this is the closest lowest low to where the market price was. So I'm looking at this low as the reference, specific to the time frame I'm basing everything off of. So the NASDAQ might retrace into this gap right here. I wouldn't want to see the S&P do that. Same with the Dow. Do you always consider the previous quarter as partials? Yeah, previous quarter can be used as partials. Which this was 11:55, so technically it's not the previous daily cycle quarter, but who's counting? Stop the break even, TV, TradingView move my entry down. So much after the partial. Don't get TradingView sometimes. Overall decent day. Yeah, today was definitely not easy. Definitely not easy. But yeah, so not really much else to talk about. I think that's pretty much it. This is the main move of today, unless we just continue for the rest of the day. So we'll see if we get that. Biggest thing I learned today is to wait for 9:30 no matter what. Yeah, it's a big thing. So I think we're going to go ahead and wrap it up here. So hopefully you all found this one insightful and you all are able to buy yourself something nice with your demo money that you made today if you followed along. So I will speak with you all again tomorrow morning. With that being said, good luck and enjoy the rest of your day.